1 week ago, we had the volume episode, and it was a big episode. It explained how crucial volume is to what we do here as trend traders. I then explained how a volume indicator is also key because it helps eliminate losses that we take along the way, thus making our account go up and up and up. After watching the video, many of you got to work right away and started finding some of these indicators and testing them out. In a very short amount of time, a lot of you had great success with what you found, while some of you came out confused. The first 3 or 4 indicators you found didn't help. You wanted to argue with my definition of volume. You spent all of 1 hour researching and you weren't coming up with anything. Boo-hoo. But then you kept at it. And some of you, over time, it was just a matter of researching it further and testing out further, started to find some things that really worked well. Or you sought out some of the ideas of the no-nonsense Forex community, and they gave you some that worked. But some of you still came out confused. And that's normal. But let's try and fix that. And then once we've cleared up all the confusion, got a free tool for you. Let's get it. Volume and volatility. Are they the same thing? No. Are they very closely related? Yes. Should I have mentioned this before? Yes. And looking back on it, am I glad I didn't? Yes. And we'll talk about that soon, but first, understand, if you are finding this channel for the first time, you are in uncharted territory. You are going to be confused. This is not for new traders. This is a continuation video from last week. I've been spending time with my more experienced no-nonsense Forex traders, those who have consumed all the material, to kind of help them along in this process. And last week's video really wasn't for newbies either. But we will start getting a little more broad stroke next week and start going over some more broad terms for everybody. But if you're a new trader, or if you're new to this channel especially, go to the beginners video. Even if you've been trading this market for 5 years, we do things very differently, and it's only fair to you that you learn that first. You're going to love this channel, but go to that video first. I'm going to put the link below. If you go any further at this point, you're just going to get confused in all likelihood, because we have a very particular way we trade. And the last couple videos that I have been doing is for those traders. And this video is no exception. So as I had mentioned before, there's people that really love to nitpick over everything I say and do. But understanding that some of the terms I talk about are not definitive terms. They can go a few different ways. And volume is definitely one of those terms. As soon as that video came out, people were immediately like, well, the volume all depends on your broker, and it's all based on tick volume, and that's not going to help anybody. And then they'll say, oh, you use the ADX indicator. That's a volatility indicator. That's not a volume indicator. You don't know what you're talking about. While the majority of you went out and actually started looking for volume indicators and just kept testing and testing until you found a couple good ones, and now you have them forever. Some traders like to win. Some traders like to argue. I suppose the choice is yours in the end. But I do need to clarify things up a little bit when it comes to volume and volatility and other related terms. So, understand this. This thing here helps create these things over here. Can these things happen without this? They can. It's just not very likely. The chances of having these things go way up once you have volume in the market. Now, there is a reason why for the longest time I have used the word volume to talk about these two things in particular. I'm going to get rid of momentum, because when it comes to talking about actual indicators that we're looking for, we don't want momentum indicators, because those are typically defined as indicators that have changes in momentum, which is another word for reversals, which we do not do. So let's get rid of that and take it down to this. Now, full disclosure, I used to do private coaching back in the day. I don't do it anymore, but back when I did it, I had quite a few people whose English was not their first language, and they were very sharp people and spoke pretty good English. But we would run into problems sometimes if I started to take them in the wrong direction. It was really hard to get them back on the right path. And I remember talking about volume and how tough it was because this is exactly what happened. I explained how important volume is and how we need it as trend traders, and how it also creates these two things, and these are also two things that we are looking for when it comes to whether or not we should take a trade or not. And right when I said that, people started getting off track. They would say things like, oh, so we need liquidity, right? Well, that's easy. I'll just start trading real heavy on pairs like the euro dollar and the dollar yen. And I was like, no, that's definitely not the answer. You actually want to be a little more cautious when you trade pairs like that, because those are the pairs that the big banks manipulate the most. So no, that's absolutely not what I mean. And then when it came to volatility, I was like, you need volatility in the market as well. That's why volatility indicators are really important. But then they took that as, oh, well, I just need to go trade more volatile pairs now, like the pound Kiwi or the dollar South African rand or crazy stuff like that. And I'm like, no, again, that's not what I'm talking about. So just to make things easier in the future, I just refer to all of this, as volume. It's the core of these things anyway. And so I figured by just referring to everything as volume and volume indicators, I could kind of encompass everything into one. But looking back on it, what I should have done is just put them together. They are two different things by definition, but they both have a lot to do with each other. And they are both two things we really need in our market before we can really trade with confidence. So remember this going forward, traders. When you are searching for volume indicators, or if you're searching for volatility indicators, you want them to do the exact same thing. You want them to tell us, is there enough juice in the market for trend traders to have a higher possibility of winning? That's what a good volume indicator will do. That's what a good volatility indicator will do. In the end, you only need one. So search for both, but end up with your best one and plug it into your system. But this is good because now we've kind of opened things up a little bit. You can search for volume indicators. You can also search for volatility indicators as well. And I hope I was able to clear things up from before. If you still take issue with the way I define things or the way I connect the dots, there's really not a whole lot I can do for you at this point. We need to move on. Actually, you know what? I'll put it up to a vote. So traders, what would you like to do? Do you want to sit here and argue my definitions of things and the way I say this relates to that? Because we can do that. I got time. Or what do you think of this? Let's take what we do know and try to leverage that information into a bunch of pips and a bunch of money down the road. Does that sound good? Which one do you guys want? Oh, all of you want option B? All right, well, good. So do I. Let's move forward. So talking about volume indicators, it's pretty precise, especially in the eyes of Google. The term volume indicators can be pretty vague overall, but Google will define them as an individual entity. If you are looking for volume indicators, a very specific type of indicator is going to pop up. And for that reason, I'm glad I only gave you this option. You needed to drill down into this category first. If I would have said you can look for volume indicators or volatility indicators at first, it may have been casting too wide of a net. I'm glad we drilled down into this one category. It helps with people learning to trade this way for the very first time to keep things very specific. And lo and behold, many of you have already found really good examples of a true volume indicator. But whether you have or have not, know that your search can now also include volatility indicators. Now do not get confused. You do not need one of each. You can search for volume indicators and volatility indicators and pick the one out of both categories that does the best job. Now, you're going to notice some things when you search for volatility indicators that you did not notice with volume indicators. Volatility indicators can be a bit easier to read. The ADX, for all of its faults, once you get rid of the riffraff, can be pretty darn easy to read. We saw this in the video I made last week. But at first, at least, before you really start getting technical with it, you're going to see Google give you the same examples of volatility indicators over and over again. You're going to see the ADX, like we already saw. You're going to see Bollinger Bands, because part of what Bollinger Bands do is show volatility. It just does not do a very good job of this. And looky here. You're going to see our old friend, the ATR. And I've already seen a lot of you use the ATR as your volume/volatility indicator. I don't use it for that reason, and I don't recommend you do it either. As much as I love the ATR, if you go back to that video, I told you I don't use the line. I just use the figure. The line can get you into trouble. Let me show you what I mean. All right, so here we are on my MT4 charts, and we are using the pound yen for this one. I wanted a more volatile pair because it's just easier to show you this, and for no other reason but that. So I put the ATR up, and if you are going to use this as a volume volatility indicator, you are going to need to place a line somewhere on it to say, okay, if the indicator is above this line, it's okay to trade. If it's below, then it's not okay to trade. So let's look over here. The range we have is about 171 to 88. Let's just put a line, because we're just testing things out here. Let's put a line at let's see, where's this? 114. Let's put a line at 115. So go ahead and tweak our settings a bit. We want to go to levels. And 115, as far as pips go, is 1.15. So we add that, and now we have our line. Great. We have something we can now reference using the ATR, which is a classic volatility indicator. There's a problem with this, though. This might seem like a good line now. Whether you agree with that or not. You know, you might have it higher, you might have it lower, depending on what you want to do. For one, this line is going to have to be in a different place on every single currency pair you trade, which is a total pain in the ass. Two, markets change. Let's go back some and see what I'm talking about. So let's just go ahead and scroll back to not even a year ago. So now, on this chart, your ATR line is over 115 the entire time. That is not what you want. If, let's see, February 2017 all the way up to August, it's about a 5-month span. If during that 5-month span, your volume volatility indicator did not stop you from trading one time, you do not have a good indicator. Way back, not even a year ago, for this line to be effective, it would have had to have been higher. So depending on market conditions, you're going to have to raise and lower your line on every single currency pair you trade. This makes things wildly inconsistent. And as far as backtesting goes, forget it. You're never going to be able to get a true number for anything because this thing is constantly going to have to move. This is the biggest reason I don't like using the ATR for my volume volatility indicator. You might come up with different, more creative ways to use it. And that's great. But there's a very distinct reason why I don't, and those are the two main reasons why. Your volume indicators should adjust to the markets on their own. It shouldn't take you having to go in and interfere along the way. Does that make sense? So if you're wanting to use the ATR for this purpose because you already have it on your charts anyway, I would suggest you don't. So for your notes, for all the note takers out there, the reason I don't like the ATR in this situation, there's just no consistency over time. You're constantly moving that bar if you wanted to read things correctly at all. It's up to you to always go in there and adjust that thing. Not really the way I want to go about it. And it's really hard to backtest this way. Backtesting should not take that long, but it would take really long if you constantly had to move that bar up and down. So let's get to the reason why many of you are here. It is free tool time, y'all. We have something here that I don't know how I stumbled upon it. It's one of those things, if you just have enough curiosity and you go find a bunch of shit that doesn't work, eventually you're going to find something that works out really, really well. Now, please understand, this is not a part of my algorithm. This is just a side tool that I check in on and use every day. You approach this however you want. You set your parameters on it wherever you want. I don't think I'm really ever going to mention this tool again because it is completely optional, and I want to keep things nice and clear, and I don't want to keep referring to things that you can choose to use or not use. So this is totally up to you, but I have found it to be extremely helpful. So let me go show you what to do, and then I'll actually go do it myself and show you what it is. So this is what you need to do. Go to barchart.com, and in the search box, type in $EVZ. I haven't looked at the actual title in a while, even though it stares me in the face every day. I think it's the FX Euro VIX or something like that. Bookmark it so you'll always have it. Like I said, I refer to it before I even open my charts just to see what's going on. And I'll tell you now, you can put your number wherever you want. My number is 8, and you will see what I mean. Let's go ahead and go to it now. So here we are at the barchart.com homepage, and you do not have to log in or sign up to get this tool. You just have to go to this box right here and type in $EVZ and just click right there. And it takes a minute to load, so you just have to give it time. And once that little chart pops up, see what happens when you backlog your site with ads? It takes forever to load everything. Okay. Hit full chart. And this here is what you want to bookmark. So I will refer to this, and I will typically just look at this number right here and see if it's above or below 8, which is the number that I set. So going down a little bit here, you see these huge spikes in volatility throughout the day. As is always the case, we want to wait until the candle actually closes. And so once we get that reading, it might not coincide with when you trade. That's fine. Just do your best and try to get a good idea if it's going to close above or below your line. And so my line's going to be right about there. And then I just look, like today. It was underneath. So what I will typically do is not put quite as much risk on a trade, because from a very macro sense, the market is telling me that the volatility and the volume just isn't quite there today. And you might have to adjust this line over time. It used to be 8.5 for me. And then, as a lot of you know, as soon as the stock market started getting really good and started ticking up very slowly to record highs, our market dried up a lot. So it was either me never take a full trade or move that line down a bit. But this has helped me quite a bit, because I know when these bars are under that 8, the chances of me winning a trade go down. And that's really helpful information to me. Now, yes, this is true. At least since June 11th up until now, over half the time, I was not able to put a full 2% trade on. But that's okay. It's all about the big picture. And during that time, it didn't drop super low. I've seen this go all the way down to crazy low territories where I just stopped trading altogether, which was good. I would have taken a bunch of losses, so it turned out okay. But overall, I will drop from maybe a 2% risk down to a 1.5, 1.75% risk just to mitigate my losses better. Again, use this tool however you want, but it has helped me a lot. and it is something I refer to every single day. And it doesn't take long. I just check on that number, see where it is, and I kind of use that as my guide going forward. Real simple. But like I said before, these are not hard rules. You can choose to use this or not. You can put that line where you want, and you can do what you want with it. Don't take this as something VP is telling you to do with actual rules and numbers attached. This is just a tool that I've given other traders in the past, and even they still use it today. But if you're trying to incorporate it and it's causing confusion, just get rid of it. It's better to not be confused than it is to actually have something like this around. Wait until you've perfected your system and you've gotten used to it before you add something like this on. So to wrap this all up, volume and volatility indicators are in the same group. You can now start searching for volatility indicators as well. Take whichever ones work out the best and plug that one indicator into your system from this point forward. And you can use that tool if it helps. It is more of an advanced tool. If it's causing any kind of confusion in any way, get rid of it. We don't want to complicate things here. But I still get traders from years ago telling me how much it has helped them in their overall trading. It doesn't look like much on the surface, but it really has helped me in my trading a lot in the last few years. And always keep improving on this. Never stop. You don't have the Holy Grail. The Holy Grail is always out there. I say that all the time. If you have something you really like and you want to forward test it, by all means do that. But in the background, always be testing other versions to see if you can come up with something better. This goes for your confirmation indicator. This also goes for your volume indicator. And if you haven't done so, I'm sure most of you have, because most of you are my diehards, and these past few videos were for you. But I much rather, if I had the choice, make videos that help everybody. And so we're going to start getting back to that. But if any of you guys have not, subscribe, hit the bell. Videos like this where we really drill down into certain topics are very necessary because I want to leave no stone unturned going forward. But there are still so many topics we need to cover. We're going to start doing that. And for now, you guys got your work cut out for you. Many of you have already seen what a great confirmation indicator can do. And many of you have also seen already in a very short amount of time. It usually takes way longer than this to find a really good volume indicator. But a lot of you have already found one. And you're putting it into play. And you're seeing the difference that it makes. The stuff is real, traders. It is worth however long it takes you to find ones that work. So with all of this new information in hand, get to it. Go get it.